Okay, there we go. All right, good morning, everybody on Zoom as well. Thanks for joining in this morning to kind of discuss some non-QM type of options. I think it's a really great program, and I'm really glad that Cross Country has these types of loan scenarios just to kind of help, and in this market that's ever so changing, especially when it comes to self-employed borrowers or borrowers that may not be able to show all of their income on the normal formats like tax returns, W-2s, things like that. So this is a unique opportunity, I think, that's going to help us and help you guys get more buyers and more loans, more homes sold and all those types of things, just to have this extra access to these types of financing. So there's a couple of things I want to kind of discuss today. First, we're going to just kind of go over some of the basic things to kind of really kind of dig in on this kind of untapped market, because not a lot of places like to even do them. But I've done a few of them already so far, and I really like them. I'm really kind of used to how they're structured and what the investor is looking for to get them qualified. So it's a unique opportunity. I think this is going to help get more buyers. So what we're going to do now is just kind of go over just basically introduction, what I'm going to talk about here. What do the portfolio buyers look like? The market is changing, and there's a lot of underserved opportunities that's out there. Portfolio type loans, where can we find portfolio borrowers, and not in the basically what not to do, because this is a total reverse of, and we'll get to that, what people think about in regard to what they need to show proving on tax returns. So we're going to kind of discuss that a little bit here too. Okay, so basically straight down the fairway, conventional products, 80% of the market, what you guys see is either conventional FHA, VA, those types of, those types of loans. And then 20% is portfolio non-QM products, which is non-traditional type loans. And what I mean by non-QM and non-traditional type loans, it's basically not the ordinary types of financing, to keep it in, understanding layman's terms. So these particular types of loans don't have to, stick and go under Fannie Mae or Freddie Mac, or Ginnie Mae when it comes to government loans, types of guidelines. So they're just not conforming to those. Those are, these are more for specific, types of borrowers where they don't have those other restrictions and compliance laws that we have to kind of always follow when it comes to, working with Fannie Mae or Freddie Mac or those types of, those types of products. Okay, and why does this matter? You know what I mean? So close up to three more deals, possibly more, to increase your commission by maybe $54,000. You just never know. I mean, because with these types of programs, it's just a great opportunity for you guys just to get more business. And then, like, who are these types of buyers? Okay, mainly I would say these are really geared towards self-employed borrowers, and I'm going to go over a couple different examples of some situations that I've had where the buyers have their tax returns and so forth. But self-employed borrowers, this is such a great opportunity to help with them, because they are definitely the non-conventional type of scenarios. Most of the time these borrowers make a lot of money, but then they pay Uncle Sam, say they make $200,000 a year, but they're telling Uncle Sam they make 35. You know what I mean? So it's just what you get it. I mean, they're trying to cut as much corners as they can, so they don't have to pay taxes. Right. So that just seems to kind of be the norm when I'm looking and reviewing tax returns a lot, but with self-employed borrowers. So, but yeah. And then jumbo borrowers that are out there that need a loan for a property outside the conforming limits, as determined by FHFA, or just different types of homes and things like that. You know what I mean? So credit issues, life events affected by negative life or credit event, those types of things, that can, if it's an issue with that, asset qualification, investors, these types of loans are perfect for these particular type of clientele, which I think you guys are, I'm sure you guys have already been working with them. I know a lot of you guys have closed investor type loans and things like that. So this is a unique potential program for them as well. Okay, so investors, so 36% of homes, are rentals that we've been seeing over the last, case study when we're talking in between loans and, the properties that have been sold. Okay, so a 10 to 11 million number of individual investors, landlords managing an average of, 2 units each. This seems to be the trend when it comes to, investors. Self-employed, 36% of the US workers are GIG, which workers in some capacity, which means basically working for themselves. So 59 million people categorized in this economy. In regards to that, 17 million people categorize themselves as self-employed. So the other 5 million that they're doing this case study on, the adverse credit events, they've had either credit issues or there's been just certain things that have held them back from the standard normal types of guidelines. Okay, here's a quick scenario, and I'm going to kind of touch base on two of them here. Like this particular self-employed borrower, buyers make 200K per year and has a credit score of 758. He writes 75% of his income off. Now he's left with about 50K, trying to get a jumbo loan, and he doesn't just quite qualify. So solution, our bank statement program, we have approved the borrower up to a $750,000 loan, and the buyer, can get the keys and the seller got the proceeds and everybody's, happy. It's basically like a win-win. So that's a scenario. And I had one, just personally, this was about a year and a half ago with a bank statement for a client. He was wanting to get pre-approved to purchase a home for his daughter. Okay. She was going to be the primary, he was going to be the secondary, whatever the case may be, how we needed to do it. So she didn't have any type of credit rating like that established. So what we did was I took a look he's like, well, I'll just buy it for him. I'm like, okay. I took a look at all of his tax returns. Okay. I'm pulling this guy's tax returns up and I'm looking at his, not just the federal, but I'm looking at his business tax returns as well. Business is thriving, showing great money movement, deposits, income, depreciation was very low, strong business. I look at his personal tax returns. I look down and I see negative $215,000. So he was basically showing negative that much money on both years of his tax returns. I'm like, there's not a lender in this world, not even Jesus would lend this guy money, right? So I'm like, this is what are we gonna do? Let me just think outside the box. And then I started researching some of these bank statement programs and these investor type loans that we have. And I was like, well, and then I started asking him questions and talking to him scenarios about, his average monthly deposits on his business account. He's like, oh, well, yeah, the business does well. I mean, we deposit, probably about $150,000 to $90,000 a month. I'm like, okay, all right, well, let me just take a look at, 24 months of your recent bank statements. His credit score was good. I think he had like a 710, credit score, so good enough. I pulled those on and reached out to our bank statement, loan contact that we have. And was like, hey, here's a scenario. This guy's got 20% to put down, but he doesn't show any income on paper. What can we do? Can we do all bank statements, deposits, send them over? He reviewed them all. He's like, oh yeah, this guy can be pre-approved up to he could have got $1 million house if he wanted to, So it's just, taking the time to kind of review, see what programs are available and let people know their options instead of just dismissing them and, and passing them off to somebody else. You know what I mean? So great, unique opportunity just for something, for you guys to gain extra buyers too. Okay, so very, very cool stuff. Yes. That's a great question. It's going off of this particular scenario that I had. It's going off of his average monthly deposits from the business into his business bank accounts. Okay, they'll subtract, some of the operating costs, and things like that. Exactly. Yeah, this is what's going into the business. Correct. Yep. So very unique and, and very cool. So here's another scenario here that we had. Last week, we had closed a $1.3 million loan, a home of a family that was turned down by 2 of the lenders due to a foreclosure that occurred 2 years ago. Our full doc program, we enabled the grateful family to move into their dream home and just in time to, enjoy their staycation. So lots of different things because they don't necessarily conform to the other types of guidelines. You know what I mean? In that regard. So between foreclosures and bankruptcies and all those types of things. So here's another scenario. A borrower recently sold their multi-million-dollar business. She started her business less than 2 years ago. When she tried to qualify for a loan, she was rejected since she didn't have a long enough self-employment history. Her plans moving into her dream home were almost, derailed. But then our asset qualifier program, another program where it's based off of their assets, how you can get them to qualify, for mortgage financing. So there's lots of different outside the box options, guys, that are available for, for clients that just don't conform to the normal, the normal type of guidelines. It's very unique. And it's just once you get a chance to do them and you learn them, it's just another tool in your tool belt. Okay. All right, here's another scenario. Are you losing out on closing deals because buyers are investors? An investor looking to purchase, her 19th investment home. Her prior funding was very costly because it was, hard money and high interest rates and fees. She was unable to qualify for mortgage using her tax returns. After a rental analysis was completed, she was able to qualify using our investor cash flow program. Investors are able to purchase, and she was able to purchase her 19th home. So lots of different, options that we have available, guys, with this kind of program. It's very cool. Oop, I see something in the chat. Let me make sure. Oh, wait, I think she can hear me now. Sorry, yeah, because I was muted. I think we're good now. So, all right. Okay. Yes. Yes.
Did you go over anything regarding OFA?
No, I haven't yet, but I can absolutely touch base on that. Oh yeah, no problem. Yeah, no, very good question. So yes, and then where can you find, more portfolio buyers? I mean, I know you guys, most of you guys are here are experts on social media. I'm still a work in progress. I'm getting there. But revisit any, turn downs in your book of business, builders, developers, accountants, CPAs, financial planners, bankruptcy or divorce attorneys, all these types of people could be great eligible, buyers, for these types of non-QM products that we have. So just to keep adding, different opportunities, because these people have a place to go now, we can get them done. And here is a what not to do, especially when it comes to telling self-employed borrowers too, because now that there's these types of loans that are out there, no one's really supposed to advise any type of business owner on how to do their taxes and do their write-offs. That's just strictly between them and their CPA. But there's conversations do come up in regards to, I've had a lot of agents ask me, well, what do we tell our borrowers to? Do they need to pay more or show more income? Those types of things. That do not tell your self-employed borrowers to not claim deductions for 2 years so they can qualify for a conventional loan. Do not tell your investor they own too many properties, for you to help them. Do not turn away buyers who have suffered from financial harm and COVID pandemic circumstances, those types of things, accepted forbearance, loss of income, those types of things. And do not automatically turn away a borrower with a complicated financial situation. Let them talk to, myself or Jessica and just kind of see what's going on with their current situation, because there could be something that they hadn't looked into yet and maybe noticed that, hey, I could potentially be a great fit for this program and still get a house.
Owning say a lot of properties or different buildings or businesses help your cash flow on any
Absolutely.
so
Absolutely. Yeah. Right.
Okay.
Yeah. Yeah. And so, it's all about just learning and understanding what the process is with the programs and just seeing if they are, like a good fit. And so I'm going to jump into this a little bit here too, just so you guys can kind of see. Let me see if I can enlarge this some more. Wow, it's just not going. So let's show start from the beginning. There we go. All right, just so you guys can kind of see this a little bit more here. All right, so there's a couple things I wanted to kind of touch on. Because we have those types of credit issues, and where's my other? All right, let's close out of this. I'm going to try to show you too. Bank statement program. Because there was some other good information I'm going to show you guys real quick too that I had. Okay, I just want to show you some of the highlights of the program. Here we go. You guys see that pretty good? I'll scroll down too. But just to kind of, just so you have an idea of what we're talking about. So, all right, so the bank statement program, credit scores, they can go all the way down to like a 680, 2-year seasoning from foreclosure, which is unheard of. I mean, FHA is at least 3, and that's always been the soonest, from a foreclosure. And that's from the actual date from that the property was sold, not when they foreclosed, but the actual from the date that the house was sold and out of their name. That's when their clock starts. Very similar to, like for FHA loans, when it comes to, bankruptcy discharge, it goes from the actual discharge date of when it was completed. Okay. Not when they started their bankruptcy, it's from the discharge date. So those types of things, up to 12 to 24 month business bank statements. They must own at least 50% of the business to use, but we can do loans up to $3 million minimum. I think right now it's about $150,000. 2 years self-employment, is required. No tax returns required, 1099 optional if they have them, and that's even if they do have them, and up to 85% on a second home and investment properties. So unique type of, information. Okay, and then investor cash flow. Okay, so we've got up to 75% LTV, same credit score requirements, up to 680, no personal income used to qualify, no limit on number of properties financed, 5 with Angel Oak. Must have housing history, own a primary home, no employment required on application, qualification based on property cash flow, which is basically their portfolio of of homes that they do have. Loans up to 1.5 million. Properties can be in an LLC's name, which is something that's more unique too, which you can't do that on the standard financing side. Short-term or VRBOs are okay, no condo hotels, those types of things. But so just a great list of non-QM type products that that we have available that you guys have access to. Yes.
So I know on like some standard like investment loans, they can count 75% of the investments income as your income. Is that the same thing here? Like
yeah. Yep, as long as the cash flow is there and they can show that, with the documentation, whether it would be through the, the business bank statement to show that it's consistent, they can absolutely use that. So, I mean, it's a great tool, so, I mean, it definitely, it does take a little bit longer, to get these types of loans done, but, which is pretty standard just because it's a lot more paperwork and they have to go through those types of bank statements and things like that. But yeah, it's worth the wait. If these people can get a house, you know what I mean? And when everybody else was telling them no. So, I mean, it's a unique situation.
And then, like, that's probably looks like the biggest con is just like the more like waiting time.
Yeah.
Is like either don't get the loan or we go one of these non-traditional routes.
Right. Yeah. That I would say is the LTV restrictions, you know what I mean? Because 80% is the max, it does take a little bit longer to get those done. And the investor cost is a little bit higher than the standard cost, but at the end of the day, this still gets them into the home that they're wanting to, and it's not going to restrict them to going off of financing something that maybe that's just enough of the income that they can prove as opposed to what they truly make. So, that's where I think it really kind of makes up for, these extra little things that we have to, factor in.
Comparable interest rates?
Yes, like one of the deals that I had that I locked at a bank statement loan, I think it was like 7.25. So, it is higher, but rates right now are in 5s and 6s, so it is what it is. So, but yes, it's definitely something that's comparable. And it's 30-year fixed rates. There's no prepayment penalties or anything like that. It isn't hard money loans or anything of that nature. So, yeah.
Rates are always higher because of
no risk because it's non-qualified, so.
Mhm. Yeah. So, yeah, that's the reason, why that they would be a little bit higher. So I would say these particular types of loans, rates would be between the 7 and 8, percent, I would think. So, but yeah, I just wanted to make sure and kind of touch base on this. So, people online, is there any questions from any of you before I move on? And I want to kind of talk about our new, cash buyer program as well. That's a little bit, different, a little bit outside the box. Anybody, any questions on the Zoom, guys? If everybody's good, great. Okay, I'll kind of just move on, and so we can talk about, this as well. Oh, yes. Mm-hmm. Yeah, oh yeah. Yep, absolutely. You could always refinance depending upon, their financial situation. If they're able to, get themselves into, like if they wanted to, refi into like a traditional type of loan, they can absolutely do that. Yeah, like anything after 6 payments is when, 6 full payments have been made, then they can, adjust to refinance, pay it off, whatever the case may be. But we have to have at least that, because obviously we're not in the business of, short-term financing, which not many lenders are. So, yeah, but good question. Okay. All right, guys. Now, I'm going to get this particular, I just want to kind of touch base on some highlights of this particular program, because it's just so awesome and it's so new and unique. And I know there's been a lot of different types of programs that have been out there, like the Divvies of the world, or the, those types of programs. But this is truly a program where it can really make the buyer an actual cash buyer, and we're getting them pre-approved now. This isn't something that they're having to, let Divvy buy the home, and then they're working on getting their credit straight, and then trying to buy it back with everything ever changing. So right, so it's just kind of crazy. So but anyway, I just wanted to make sure and kind of touch base with you. This is our our cross-country mortgage ribbon cash buyer program. Okay, so in today's market, buyers are getting declined, and it takes longer to win. Buyers demand empty nesters. Buyers, investors, selling inventory, all these kinds of things are still, into, I would say, are pretty prevalent, in our market right now. And we're, trying to get buyers into the best situations possible to, to succeed with their offers. Okay. This ribbon cash buyer program, and I mean, it's designed for non-contingent offer backed by our ribbon cash program. Okay. Now, on closing day, if the buyers can't fund, which means we can't get their loan done, which means Ribbon will buy the property, okay? And then we work on getting them closed, shortly after. But basically, every candidate that is involved with this particular program, okay, we are gonna get them sent through our fast track underwrite program, which means we get everything fully underwritten. We get pay stub, W-2s, tax returns, whatever the case may be, to get them fully underwritten, okay? And basically only remaining things that we're gonna be needing would be title, home insurance, appraisal, those types of things. Everything else is going to be completed, prior to them even getting pre-approved for this cash buyer program. So that way we can probably close the house in probably 2 weeks, depending upon how quick we can get the appraisal and title and insurance back in. So, once the inspection is completed, the sale is guaranteed. So this is a great, unique program that we're offering, and I'll get into some more detail on it too. Okay, so Ribbon is our partner that is helping us, make buyers a cash buyer. So what I mean by cash buyer, there's basically 2 different options where they can either be, say they don't have a home to sell, but there's non-contingent, which means they want to just get pre-approved but have their offer backed as cash, which is a cash offer. Okay, which means Ribbon is guaranteed to buy the property if we can't get the financing completed before the closing date. Okay, and then it's a 1 transaction deal. So it's a great thing for you guys, because it guarantees your commission as well in that transaction, which is a big bonus. And depending upon the situation, the other alternative is if they do need, say they have to sell their current house, say they're contingent. Okay, we get them fully pre-approved and get them through this cash buyer program, and Ribbon will buy the house from them. buy the house for them, okay? And then after and that allows them to move in, they'll set up a prorated rent schedule up to 180 days. And, potentially longer if needed, but to get their home ready to sell so they can close on their loan with us. So that's basically the new modern bridge loan. I mean, it's an incredible program. It's just getting people to understand it. And we're going to set up a training too, I think, for you guys, to the agents. I'm going to have one of our representatives at Ribbon, kind of do like a class. So everybody, because you guys have to be well in depth and, to be, speaking about this, to make sure that people understand everything, because, we'll go over the costs and what it is to be used in this particular program. Yeah. What's that? Yeah. Well, I know once we put the address into, Ribbon does their own AVM, like an automated value module system. That's what they have too. And they'll be able to say, okay, this is where, we feel the value of this house is. We're like, okay, we feel comfortable, doing this. And so, and it's really good. And inspection too, just to make sure that, the house hasn't fallen apart or nothing crazy like that. So, but the Ribbon Boost program is just the multiple offer situations where you, compete with cash, remove financial and home sales contingencies. So, they're basically a cash buyer ready to buy now without having to sell. Okay, that's the first one. The Ribbon Reserve is like, home sale contingent offers, like if you have to sell, conveniently move and sell, their home for maximum value. Now, you see the percentages up here. The Ribbon Boost program, 1%, that is the actual cost to use that program to be a cash buyer, okay? And then the Ribbon Reserve is between 1.75 and 2.75. I'll be able to pull ours once we know what Ohio specifically is. It's not going to be an average, it'll be a set amount. So I'll get that updated for you once we have that all in the system. But those are the, the options that that are going to be available for this program that are just incredible. Okay, and so yeah, and again, it gives buyers access to cash. We can request a free home valuation, within 24 hours. It gives us what their potential value is going to be, what they feel that value of the house is going to be. So you see right on here, it says the list price is $350. The Ribbon value, yet the first AVM that came back was $357, and then the when they ran it again through their advanced AVM system, it said max Ribbon value was going to be up to $370. So that's how much they can go up to based upon that value of that property. So very cool. And then once it's all ready to go to start the offer, we send in our purchase contract along with our River offer addendum, which basically says, hey, these are the terms. We're getting their buyer as cash, or however it's set up. Cover letter, include the Ribbon fee within the deposits. Buyer signs Ribbon program agreement, and they're ready to go. Okay. All right. So home eligibility, what they do, homes they do want to, with this particular program, they do allow is anywhere between 150,000 to $1 million, fewer than 4 acres of land, built in 1960 or fully renovated, at least in 1960 or higher. Major metropolitan market, they currently serve. Homes we don't buy, foreclosures, mobile homes, manufactured homes, modular homes. So those, just to kind of keep that as something. Short sales, they're just not in that market for those particular homes. Okay, so just to kind of let you know, if the property is in Ribbon's MSA, those types of things, we will check on that for you. And the buyer's primary residence, they want to make sure the buyer is moving into the home. So they're not doing this with investment properties as of yet, but it will be at some point. So, but that's all I basically wanted to touch base on real quick, was those products, just to kind of give you an idea of, again, what CrossCountry can do, the level of programs and, different aspects and assets that we have to help you guys grow your business. I mean, because literally that's why we're here. We're here to help you guys grow your business in any way we can, whether it be adding more buyers and more sellers to your portfolio, adding more products to them, and getting them done in a quick and professional manner. That's what we do. So yes. Oh yeah, and possibly quicker, because remember, they're fully underwritten before they even get to this program. So I would say 15 days is probably, it's unbelievable. Because all we really need is, appraisal back, title work,
That really is like a cash.
home insurance. Yeah, it literally, yeah. And as long as everybody's okay with it.
Well, so visually, it's like not conventional lending, but it looks like cash on paper.
Right, yeah. And right now, that's another great question, Aaron, is the types of financing that are allowed in this right now, or is just conventional and VA financing. FHA is coming because it just depends on if we're in a situation where, Ribbon has to buy the property and then you're buying it back, that 90-day flip rule. So that's one of the programs that is not officially, but they're working on trying to get that figured out. But as of now, I know conventional and VA are definitely, products that are a go for this program, just because they don't have that 90-day, just in case Ribbon had to come in, buy the property, and then they had to buy it back. They don't have to worry about the flip rule
That'd be just
waiting period.
kind of like standard qualifications for,
Absolutely.
VA or-
There's nothing more unique. It's not like they need more reserves or anything of that nature if they meet the requirement to cover the Ribbon reserve. That's really it, and they qualify for their conventional or VA program. There's no other type of overlay or anything else that they would need to do. That's great.
Is it a type of like appraisal at all or anything like that?
No. Not at all. Nope. Ribbon, they do their automated value appraisal, and then we'll have one done as well. But that's really the only thing that they do different. Mhm. Mhm. Are you talking like if they're if Ribbon buys it and they're renting it, yeah, well, their initial reserve, if they're going to do that particular program, their initial reserve that they put in is a pretty good amount of money. It could be up to 2.5% of the purchase price. Okay, so that prorated rent verification that they're basically have to have in there that they put into that particular amount is just going to come out of that reserve first. So say for instance, they're Ribbon purchased the home, for 250,000, and so they had $5,000 in their Ribbon reserve. We'll say 2%, okay, and then it took them, say, 2 months to get their house sold and to close on their loan. Okay, so they paid 2 months worth of rent, and their rent that they already negotiated and got set up was $1,200. Okay. So now you've got $1,200 that comes out the 1 month, $1,200 that come out the second month. So that's their $2,400 out of their $5,000. So now the remaining $3,200 is going to go back to them. They get that back. It's not like they keep it. It goes right back to them. So they don't even probably have to worry about owing. Mm-hmm. Yeah.
And then you buy it from them for whatever the appraised value is that day.
Right.
Up 30,000. You buy it for that price right there. You don't really get credit towards it just because it's safe.
Right.
It's safe for you.
Mm-hmm.
During that time. So you end up paying like 40,000 at least more for the property.
Mm-hmm. Yeah, that's just how their model is. That's how it's set up. This is not that case. Their rent schedule will be based on the time that they're in that property that it takes them to get their home ready to sell and then close on it. All of that is going to be worked out, prior to, and it will come out of their Ribbon reserve, their initial deposit when they enter the program, if they're going to be doing the modern bridge loan, side of it. So
If you were putting like 20 or more % down, could you
Mhm.
qualify for an appraisal waiver with this too?
yes, that's another good question too. They do have an appraisal waiver. They do accept that as well.
Okay.
That was one of the questions, like when Jess and I were out in Vegas at our mortgage conference, I attended the Ribbon class, and that was another one of the topics that did come up was, okay, do they honor appraisal waivers? And the question is, yes, they do. Yeah, so Yeah, so absolutely. If they get one, they will honor it. They'll still do their internal one, their ABM, but they do allow us to, submit that as well. So that could even take less time now. Now we don't have to wait for an appraisal. Now we just wait for how quick title can get back, how homeowners insurers can get back and get it wrapped up. So, but yeah, good questions, guys. But those were really the main, topics that I wanted to kind of discuss today was just, non-QM type loans, just so you had some options, just to kind of think about now. Maybe you can go back and look at some of your clients that you took back in the past, and they were told no because they're self-employed and they don't show they make that much money, depending upon how they set up their business. If they do a lot of things through, how we can verify either investor cash flow, or I would say the majority of them is going to be through business bank statements, because normally everybody has business bank statements, QuickBooks, all those types of things that are set up. And if we're able to verify and go off of their deposits, they're showing enough monthly deposits minus their, their basic overhead expenses. I mean, they could potentially qualify for a loan. Yeah, 680 minimum right now for the bank statement program. Yep. So as long as it's a 680 or higher, they've got a shot. And so let me see. All right, so Zoom guys, anybody on Zoom, anybody have any questions or anything? Did you guys want to put anything in the chat? You can. I can take a look at that and answer any questions for you guys too, or feel free to unmute and you can talk to the group as well. And if you guys have any questions or if you want to need this information, I can get it for you as well too, just so that way you can use it as a reference and, or ask myself or Jessica, and we can, provide you with any information or any point of sale you need on these products. So,
Thank you.
yeah, so you're welcome. Anything you want to add, Jess, or anything you want to chat about?
No, I think it's just great that we have these tools available because, if the customer doesn't qualify, we have these extra resources to go to. So,
Mhm.
It's always good to look and have a second opinion because of
Absolutely.
because not every bank offers them.
Absolutely.
And with the market shifting, you have to reach out active like anytime you can.
Yeah, right. Yeah. Mhm. Right. Yeah. Mhm.
I'm on a barber shop, I own this, I own that.
Right.
LLC, but something's not right with the paperwork somewhere.
Mhm.
I just can never get qualified.
Yeah. Yeah. Yeah, I mean, it's definitely something unique. I remember back when they used to do the stated income, stated asset programs that were available, and they were supposed to be strictly just for self-employed borrowers, which means if their credit score was good enough, they could state whatever their income was, assets, those types of things, but, with when we had that mortgage, crash, or actually an economy crash, I should say, back in 2009, all those types of programs were gone. Okay, now we're finally starting to get back into having some realistic, financial options for self-employed borrowers and give them the opportunity to, to get loans. And programs like this, it really helps them because now they don't have to go and change their, their overall way of how they're doing business and, as far as like their tax returns and whatnot. Oh, here's a question in the chat. Let's see. Okay, Michelle. Okay, yep, no problem, Michelle. I'll make sure and get you, whatever information you need. Yes.
Do you have any programs or any information literature of any sort that I could give to clients that whose credit is not quite to the 680 mark, things that they could do?
Yeah.
That type of thing that I could, distribute to my clients, the ones that are kind of right on the cusp as far as their credit score.
Absolutely. Because one thing that, Jess and I do is when we're evaluating a person's credit, like if we get them in our system, we can actually take a look at it and see, you know, there's a couple different things we can do. We always run pretty much any client that is in need of credit increase or credit repair. We run them through our rapid rescore program, because at least will give us the initial what they could potentially do to help increase their credit score. It could say either, you know, paying down a couple accounts to a certain balance, or, you know, paying off, you know, some, you know, old collections or something like that. It gives us at least a percentage of if the borrower does A, B, and C, it could potentially increase their credit score to, you know, a certain amount. So we do those types of things all the time. Plus we have, you know, credit repair, you know, people that we do work with that we can refer them to, you know, go through that process if they really need some help removing some things off. And, you know, a lot of people, they just need the help. They try to do it on their own and it's just unsuccessful, or it's just taking too much time. You know, we'll help them in any way we can.
They're not focused.
Yes, yes,
Direction.
right. Yeah, and you mentioned OFA as well. Have you ever heard of an OFA loan, or have you done one before? Do
I've
you?
never done one. That's why I
Okay.
asked a question about it.
Yes,
License form on it, or
yeah,
qualifications for it.
yeah. OFA is a great program. It's one of the premier, I would say, down payment assistance programs that are available. And you can take a down payment assistance program if you want to, or you can just take advantage of the program and possibly help with, you know, the interest rate, or if you're a veteran, or, you know, a nurse, a fireman, you know, those type of essential workers, you know, it's a unique program, you know, for them as well. But I mean, its main focus is for people that maybe need some help with their down payment. And it allows potentially up to 5% that they can use towards their down payment and closing costs. You know, it works with any program, works with FHA, works with VA, works with conventional, you know, depending upon what that particular borrower qualifies for. So, I mean, it's another, you know, great program that helps with them. There's certain qualifications, though. They do have to have certain credit score and income requirements too, depending upon the program. And the income is area to moderate income, you know, based on that particular county's, you know, area. So, but yeah, it's a great program. I mean, if it's something that, you know, they can help, it's just going to help them maybe with their cash to close, first time home buyer, or maybe next home. You know, it is a great program, and I can get you a lot of information on that as well,
Now, is that something that
because we do those.
a client can only qualify for once, or can they get assistance with OFA more than once?
That's a great question. Initially, it's for a first-time home buyer, but there is an opportunity where they can do, it's called the Next Home program, which is OFA backed as well. They won't be able to get the same amount of, like, say, for instance, they did the full 5% of the DPA funds initially when they did maybe their first loan. They do cap you on the second one. For the Next Home program they do have, I think the max is 2.5%. If the down payment assistance is, you know, is if what they're looking for.
The important
Mhm.
thing with OFA too is that the interest rate is higher. And if they move out of the property prior to
Mhm.
7 or 5 years, depending on the program, they have to pay the grant back.
Mhm.
So that, it's not going to be the best fit for every client. So the people that have like their own funds in their bank account, or, you know, they might not want to take, because it can be up to almost a whole percentage higher of what the traditional
Mhm.
market rates are.
Right.
And something I do for your people is we make sure that the customer understands that, and that they know what, if it's something that they would want to pursue, you know, by getting the grant, but then having a higher rate because their payment will be higher.
Mhm.
And also, you know, it can be, like, if they have something change and buy the property in 2 years, well, they basically just maxed out their equity, and now they might have to pay this grant back.
Mhm.
So understanding the customer's profile and asking the right questions is what we do to determine if OFA is the right fit for them. So if, you know, some lenders are
Mhm.
like, oh, hey, there's this, all this
Yeah,
money.
free money.
Yeah.
Yeah.
That's like a sales technique, because,
Right.
oh, like, I'm gonna get you this grant, but then, I mean,
They're not
nine
used. Yeah.
times out of 10,
Yeah.
I talk to the customer and they ask me about OFA because they heard it from another lender. That other lender did not tell them this.
Right. Yeah, it's a minimum 7 years. And I mean, it's prorated, like say if they're in it for 2 years, it's prorated, but it's still, you're gonna, you know, it's not forgivable until the full 7 is up. So, and we have another DPA program that's out there that goes to about 5 years. It's through our Communities First program. That's another one that's kind of similar to OFA, but you know, it does have a higher rate. it does help with, the cash and everything at closing. But so as long as they're understanding about what the, the product is,
We're paying more, yeah.
right.
Okay.
Yeah.
Yeah.
So, yeah, you're welcome. So let's see. All right. Any other questions? Anybody, anything else that you guys want to go over? Any scenarios or a possible, clients you have that may fit in this bank statement program or something?
I kind of have a random, just general lending question.
Yeah.
Like if somebody is selling their house,
Mm-hmm.
that they got their house, I don't know, 3 or 4 years ago, and they had an FHA loan.
Mm-hmm.
Would it be like, is there a way you can like market that saying, hey, because couldn't it be assumable it's an FHA loan?
You're saying like if they're selling it to like family, or are you talking like just in selling it in general?
Yeah, selling it in general.
Mm-hmm.
Because, well, like for instance, there's a house that's next door to my parents, but I know that their property is being foreclosed on.
Okay.
I tried to reach out to them to see if I could purchase it from them directly and assume their loan, because I looked up online that they did an FHA loan.
Okay.
So I was trying to say, hey, make some money. And basically it turned into them just like, it was like a messy divorce and they spited each other. So they
okay.
were willing to, they both wouldn't sign off on it.
Wow.
So I was just like trying to figure out any way I can basically get that house
Mm-hmm.
before it goes to auction or something like that.
Right.
Or if there's any way that the bank has like possession of it before it's turned over to like the county or something,
Mhm.
or put up for auction. I don't know.
Yeah. I mean, in some cases, it really just depends too on who the bank is and where they're at in the process.
Okay.
Because technically, if a house goes into, like foreclosure, you know what I mean? It takes time for it to even, finally get itself out of their system. And it's how quick they either have a realtor assigned to the property to try to list it to sell, or trying to reach out to the bank directly. Normally at that case, if the bank's even willing to do anything, you have to, they're not gonna probably, it's going to be as is, type of thing. And there's no, it's probably going to have to be cash offer or something like that. I wouldn't imagine they would take any type of, yeah,
I've never seen it.
I mean, either.
Okay.
Yeah, because basically when they do assume the mortgage, you're taking over the balance or something, just paying on it.
Mm-hmm.
Like if you catch it off the balance, maybe.
Yeah. Yeah.
Which might be worth it, I feel like in some cases.
Mm-hmm.
Um,
Yeah. If it's all, if the bank's willing to work with you or not, because it's on their term. Yeah.
I wanna live next door to my mom, so I can have free days.
Yeah. There you go. It's awesome.
And my sister lives across the street from her. And
Nice.
I've been just trying to figure out a way. I don't know, probably, whatever it is, whatever the case, if it goes up for auction, I'll probably be at that auction.
Mm-hmm.
So I'm trying to figure out.
Yeah.
That's the way to
Do you know who the bank is? Did they say, has it
I
been
mean, I can
publicly listed
look
yet?
up online, like, I forget what it is. Oh, I don't know, I look at addresses.
Yeah.
But I can see like that it was kind of taken out.
Okay.
And like who the lender was at the time, but like, that's could have been sold, right?
Yeah.
So who knows where that's at?
Mhm. Well, it just depends if if the servicing was sold,
Yeah.
Hmm.
Yeah, that's what I'm guessing.
Yeah.
I don't know. It was just a thought.
Yeah. At the end of the day, the banks, they want their money. And if you're going to help them get their money back, then, yeah, something. So it just depends on what they're willing to do. But hopefully, they'll assign it to someone that can, an agent,
Right.
that you can work with.
Okay.
So, yeah. Yes. Mm-hmm. Wait, say that last part again. You said cash or conventional or what? Due to date of transfer. Oh, it's probably because it was a recent transfer. That's probably why, because cash or conventional, just because they don't have the waiting period, the 90-day. Correct. If it was going to go FHA or, yeah, that's probably why. Mm-hmm. Yeah.
Yeah, I've seen people accept offered with cost for sale and not know that it was in that,
Yeah, like a flip or,
within that 90 days, and then had to
Mhm.
basically just wait. or
Just
extend the
wait.
contract, you know?
Absolutely. Yeah, it's, you wouldn't believe how often we see it. So,
Cool.
yeah. All right, guys. Well, thanks again for joining on Zoom, and we appreciate that. I'm going to, I think we've got everything saved now. Okay. All right. All right. Well, I think we're good. I think we can pause recording.